Well, I would point out that the intermission has only taken place in precious metals. In other parts of the resource industry, including the oil and gas industry, which you and I talked about in depth a couple of years ago, the response has been spectacular. The uranium industry, despite a bit of a malaise, has also performed very, very, very well over the last 3 years. The precious metal sector is in a malaise, and I think in the very near term probably continues the malaise. The U.S. Treasury, or pardon me, the U.S. Fed has rightfully, I think, allowed interest rates to rise. You need to compensate savers for inflation. The fact that they have been able to do that, particularly when their counterparties at other central banks around the world have not kept pace, has meant that the U.S. dollar is very strong. So while gold is doing extraordinarily well in terms of currencies, like, as an example, the Turkish lira or even the euro, in dollar terms, investors have done poorly, while in terms of other currencies, they've done well. Most of your listeners, of course, spend dollars, so it's the dollar returns that are problematic to them. My suspicion is that if we are able to continue to raise interest rates in the United States, that the dollar will continue strong and gold and silver will do poorly. I believe, but I don't know, that at some point in time, the Fed will be forced to reverse course on interest rates, because any reversion of interest rates to their real mean, which is to say a positive real rate of return, would, I believe, be devastating to the U.S. economy. And I suspect that to the extent that the Fed has to resume liquidity measures and has to lower interest rates, that you will see then, like you saw at the end of 1975 or like you saw in 2002, precious metals off to the races. Note that I said that I sort of presumed that's my suspicion. I believe that some of your listeners probably have 100% of their net worth in precious metals, which is not a very smart thing to do. I think that investments in any category need to be right-sized to your means and to your needs. For me personally, I welcome lower precious metals prices because I continue to be in the process of acquiring physical precious metals and precious metals equities. And something that you are very bullish about in the future, you want to go lower so you can buy more cheaper. The truth is, right now, if the gold price was at $2,200 an ounce, I wouldn't sell any. By contrast, if the price was at $1,500 an ounce, I would buy much more. For me personally, it is in my interest to see the gold price lower rather than higher. I realize that my psychological circumstance and my financial circumstance is different than the circumstances that many of your viewers enjoy. But I'm trying to point out the attitudinal difference between myself and other investors. I am not disappointed by lower gold and silver prices. I'm attracted to lower gold and silver prices because I don't need to experience a liquidity event in the next 10 days, either financially or psychologically. I think that existential risk is a possibility worth considering, but I don't consider it to be a probability. And I don't consider it to be a probability in the near-term time frame. I think that the system will more likely than not, experience exogenous shocks. But I also think that the costs imposed on you to have too many of your financial assets outside of the system, both in terms of the availability of investment alternatives and the ease and cost of employing these alternatives, mean that insuring against the contingencies of a total system breakdown should probably be confined to survival limits, which is to say, if you're worth $1 million, as an example, perhaps, I'm not saying that you do this, perhaps you should invest 50,000 of that in precious metals and ammunition, because in the event of a total system breakdown, ammunition will be at least as important as physical precious metals, and store that in a way that seems appropriate to you. I don't think, as our system is currently configured, if you are an investor with a reasonable sized net worth, that you invest too much money in a contingency that's a possibility rather than a probability. If we see a circumstance where existential threats to the system are more expressed, the amount of money, I might say unfortunately, that we will make on in-system investments in assets that would do well in times of panic would be extraordinary. And my suspicion is that if you had the courage and the foresight to recognize that circumstance, that you could liquidate your on-market investments and redeploy that capital off-market as the circumstance warranted. You thought that you were in a cash instrument. A cash instrument would have yielded you 40 basis points, and you were receiving 200 basis points because of leverage. When the overnight capital markets froze and your money market fund no longer had access to credit, your money market fund blew up. I said that the most important investment that people could make was in themselves and their own education. It amazes me that people blindly trust the brokerage industry. I come from the brokerage industry. That trust is miswarranted. People blindly trust the Securities and Exchange Commission. And while the Securities and Exchange Commission has very good people employed in it, in the industry, we laughingly call it the Swindler's Encouragement Committee. The SEC did not protect you from Enron. The SEC did not protect you from Bernie Madoff. The SEC only really seeks to protect the industry from a lack of public trust. It's important to participants in investing, whether they want to or not, to understand that the only protector of their wealth is themselves. When I operated a brokerage firm, I had to negotiate a clearing contract with another larger brokerage firm. There were 16 brokerage firms on offer that offered this type of service, and I need to tell you that even as somebody who is relatively expert in financial statements, balance sheets, and income statements, at least 12 of those 16 potential counterparties had balance sheets that were to me incomprehensible. I was unable to trust client funds to counterparties that I couldn't understand. Most people don't take the time to read the balance sheets and the income statements of the institutions that they trust with their money. A bad outcome is precisely what those people deserve. The idea that they believe that somehow Big Brother, Big Daddy will protect them. The idea that they seek to be protected by government when they should be seeking to be protected from government. I know this sounds heartless. Well, another great quote from Pogo, the cartoon strip character. I have met the enemy, and he is us.